whereas I, often talk about these big waves, and once you've had a retest, you're wary when it rallies up into that sell zone area. So you're always sort of a bit wary initially when you get that rally, saying, well, if the selling pressure's around, it's going to come in somewhere around here. And we saw that it did last month. G'day there. Welcome to the closing bell on, well, it's the 9th for me, the Thursday, recording it a day early because I'm taking the Friday off to play some golf, which is, well, could be exciting, but it's been a while, so I'll probably be pretty hopeless. And looking at the markets, I mean, we know I've, been really outlining things in detail for you recently. Basically, the market's rallying into what I think should be overhead resistance, and it's a wait and see moment for me. Is it going to really kick higher into a Santa rally and turn things around, or is the music going to stop? And I'm wary of what happens on the next sell-off. So I think that's just a state of play for equities. So I thought I'd switch and have a look at gold and oil and the bonds just very quickly for you, show you what's going on there. So in oil, I think it's an interesting setup. I think I have been updating you on it a few times, but just to recap things for you, I've been waiting to see whether we would see things kick lower after the monthly sell pivot, which was confirmed last month. So the setup is sort of a little dangerous. If I just look up close at the just recent wave, which is really related to a lot of the trading we've seen over, well, a couple of decades, and we just focus in on, that immense sell-off and crash back in 2020, and that whole wave higher going to 130 bucks, pretty much in a straight line. Very strong run. And we've seen the correction over the past sort of year or so in 2020. And you can see, again, you've got the, monthly sell pivot coming in there and then marching lower and lower in this move. And you can see there that it's hit that point of control, exactly the midpoint. And we've seen the buying pressure come out of there, but it's in long-term downtrend. So we've got that 10-month exponential below the 20-month simple. So we're saying, oh, this could be turning down, and you want to be wary. You can see in the past, we had a nice long-term trend there from 2017, 2019, and turned down. And look, it rallied and really stuffed around for a very long time there. But ultimately, that long-term downtrend was warning you about the selling pressure, and then we went into that big nosedive. So it's a similar situation here, where, as I, often talk about these big waves, and once you've had a retest, you're wary when it rallies up into that sell zone area. So you're always sort of a bit wary initially when you get that rally, saying, well, if the selling pressure's around, it's going to come in somewhere around here. And we saw that it did last month. So we had the monthly sell pivot within the long-term downtrend, which is, danger, danger. And it sort of settled last month on that 10-month exponential moving average. And now it's starting to kick lower. So the problems in the Middle East, obviously seeing some buying coming back in, worried about, what happens there. But it looks like those worries are receding. And, maybe is this a sign of growth weakening rapidly? It's going to have an effect on inflation coming off the boil, that sort of thing. So this movement in oil prices is very interesting at this juncture, with bonds starting to rally. Maybe we're seeing a U-turn in the bonds. If we do see this extend down, from here, you're saying, well, watch out, I guess, below that point of control. Are we going to see a full rotation? That would be pretty amazing. but I'd be a massive buyer of oil down there, the way the long-term fundamentals are. But just for now, it's looking quite weak. There's been a lot of boxes ticked here of that retest, the rejection from selling pressure, sell pivot, and now the wave down, is that you are saying this can sort of go to retest that major support in the short term. But, it can stuff around a long time, as we saw in the past there. That's nearly a year of going nowhere before you saw the final move. So that's just a first taste that it is a negative setup here in oil prices right now, and they can surprise to the downside. And gold, also interesting. It's such a difficult chart with gold, and I haven't been talking about gold much because of the situation. Really, how I'm looking at this massive wave higher, 2019, 2020, and now we've been stuck in a range ever since. So there's your point of control of that range. I've sort of been really trading around that range. People will know. Sort of went long through here, got out, watch out, waited for the false break, got long again, and then sort of having to get out. And it really is just stuck in that range. And the long-term trend is now up. So you're saying, okay, this could be getting ready to trend higher again. But, that point of control is still really in charge. And I've been sort of wary after that spike in buying due to the troubles in the Middle East. That spike has taken prices up into that sort of sell zone area of the range. So I'm sort of looking within that range. You can expect to see reversals often sort of around that area. And yeah, it's been rejected here in the short term. So I'm just, a bit wary that it could see more selling pressure. And look, it could, retest that point of control, and that could actually be great buying. I'd probably be more keen to be getting long gold stocks, etc., closer to that point of control. And really big picture on gold, I sort of remain firm in the view that really gold has to fall back below that sort of $1,600 region for things to look really bad. And it will look really bad if it heads below there. I won't be long gold stocks if gold heads below there. But while that level holds, you do have to sort of accept that it can do lots of weird and wonderful things before turning up. And that's just the situation of that very long-term range that it's stuck in, that you have to be prepared for, some downside volatility that will see buying pressure, and ultimately, everyone's long-term thoughts that it's going to break out can all still take shape, but that might be another 6 months of selling pressure before turning up. So that's sort of how I look at gold at the moment. I'm not chomping at the bit to be buying it, but it is constructive, and I'm keeping an eye on it. And possibly back towards 1880, we'll get a bit interested in some gold stocks. I'm just going to finish on those bonds, and with oil prices coming off, we've got to think about this. Are we at the top of the cycle? These are the 10-year bonds, big breakout from a very long-term channel down in rates. It's spiked up to 5%, so which was actually the high from a few cycles ago. You'll see back in sort of 07, around this level was pretty much the cycle high. And just moving on to the US government bonds, and I do apologise if the audio just went down a notch. I had to pause the recording, and I'm just finishing it off on the road. Now, these bonds, look, the yield is dropping. So everyone is starting to watch these US 10-year bond yields, obviously, because we've had such a big sell-off in bonds, and the bonds are selling off when the yield is going up. And they've hit 5% recently. So this has been, the last few months, rates going from the 10 years going from 3.4% all the way up to 5%. So that can cause some real problems. And we're seeing those bonds actually rally after the Fed came out and said, well, we might be getting close to the end, but we're not sure. So that's what's caused the rally in stocks recently. I just wanted to make the point that, yes, those bond yields have come back off from their highs, but it's still early days. If we look at this weekly trend, this is going back a few years, those weekly trends, I really do need to see a weekly trend shift to the downside before I'm going to get too hot and bothered about these bond yields really turning down. So that's still a while away. So I'm still in a bit of a wait and see attitude, I guess, with these bonds. Are they at some sort of a high, and is it time to start buying bonds? I don't think it's quite yet. And we saw last night Powell coming out and saying he can't say that inflation really is totally under control yet. And so there may still be further rate rises. So we're still in a real touch and go environment where things can go either way. So I just want to finish off with that S&P 500 and the price action last night, because I'm now doing this on the Friday. So just looking at that S&P 500, and last night it had a bit of a bad night, not that bad, down about 30, 40 points. But just interesting to note, we've been following this closely, of course, where we've got this huge correction that happened last year, just analysing all the data based on that, looking at the buy zone of that whole wave from last year, the sell zone. It's just for new people, you should go back and watch past videos if you're not understanding what I'm talking about. And we've been watching this sell-off evolve from that area we expected to see selling pressure. We've seen the retest of that midpoint, the point of control, which is where the buying came in, but it's still in the weekly downtrend, which is what I was saying last week. So my question is this just a quick short squeeze that's going to meet stiff selling pressure at some point up here? And the setup is such that if it heads below those lows from a couple of weeks ago, I'm thinking it can really start to nosedive quite quickly. I won't make big judgments about what it will do from that point, but it's just once it's down there, you're starting to get a bit nervous. So it really is why I'm saying it's sort of it's on tenterhooks, I guess, the market. If the selling pressure comes in up here, look, it might go a bit higher, but as long as it stays below the top of that whole structure, I'm currently in a bit of a nervous bearish stance and waiting to see what happens. And but we do have now that weekly buy pivot. So always the market sort of confusing you, really whipping around. You've just got to make a stance and put your lines in the sand and see whether it plays out. So my whole movement at the moment, what we're doing, we've got short around here, and we've sort of taken part profits around here, and pretty much just waiting and watching now. So yes, another wave lower, and watch out. I think it could unravel a bit more than people expect. So that's really the setup now. Let's see how next week plays out. Shoots higher, all of a sudden it can look very different. But things are set up now, yes, to look pretty nasty if it sells off. All right, I'll come back with more next week when we know a bit more.